Back to the newsroom, data sources and information. A good reporter can smell a planted story, a sudden, coordinated push where everyone repeats the same line about the same obscure thing. In investing, that planted story has a name, the pump and dump. Today Nikhil gets hands-on practice spotting it, the tiny stock nobody knew yesterday that everyone is screaming about today. Learn the pattern once, and you'll never be the one left holding it. Meet Nikhil. He's 26, a software engineer from Pune, active on a dozen trading groups. And today, the same message lands in 6 of them at once. A tiny stock nobody had heard of yesterday, now a guaranteed multibagger, with a target of 500 rupees, and everyone shouting, buy now before it flies. The old Nikhil felt the FOMO and reached for the buy button. But he's learning to read the pattern first, because when a story arrives this loud, this coordinated, and this obscure, the story itself is the warning. Here's the rookie move. Nikhil buys the hype, near the top, on nothing but a target and a rush. He even forwards it to friends, telling them to load up, becoming, without realizing it, part of the very machine that's pumping the price. He never once asks what the company actually does, whether it makes money, or who is orchestrating all this noise. And then, days later, the price quietly collapses, and he's left holding a stock nobody's shouting about anymore. That's not bad luck, that's the design. So Nikhil stops and reads the pattern, the 4 tells of a pump. 1. It's a tiny, obscure, thinly traded stock, the kind that's easy for a few operators to move. 2. The hype is sudden and coordinated, the exact same message, the exact same target, appearing everywhere at once. 3. The promise is a guaranteed, huge, quick return, 2x in a week, not a business case. And 4. Manufactured urgency, buy now, last chance, before it's too late. Underneath it all, there's no real business being discussed. When you see those 4 together, you're not looking at a tip. You are looking at a trap. Here's what Invest-InsightsPRO wants you to notice. This is a pump and dump, and it works exactly as designed. A few operators quietly buy a cheap, obscure stock. Then they manufacture the hype, the groups, the targets, the urgency, to pull in a crowd. The crowd's buying pushes the price up, and at the top, the operators sell their cheap shares straight into that demand. Then the hype vanishes and the price collapses onto everyone who came late. So follow the incentive. The person screaming, buy now, already owns it cheap, and needs you to buy so they can sell. The only winning move is to walk away, every single time. So here's your checklist to spot a pump and walk away. First, a tiny, obscure stock plus sudden, coordinated hype, the same message everywhere, is a giant red flag. Second, a guaranteed, huge return with manufactured urgency means someone is selling to you, not helping you. Third, follow the incentive, the loudest voice already owns it cheap and needs your buy to cash out. Remember, real investing is quiet and slow and a little boring. If a stock arrives screaming and promising to change your life this week, that scream is the whole story, and the answer is to walk away. First for you, a group promises 3x in a month, guaranteed, on a stock you've never heard of. What do? Buy a little, because you can't miss a guaranteed 3x. Wait a day and buy if it's still rising. Or recognize the pump pattern, obscure stock, guaranteed return, coordinated hype, and simply walk away. It's walk away. The word, guaranteed, attached to a huge quick return is not a feature, it's the confession. No honest investment guarantees 3x in a month, and chasing it a day later just means buying even closer to the dump. One more. Not every small company is a pump, so how do you tell them apart? Is it that the pump has louder, more confident promoters? Is it that you simply can't tell, so you should avoid all small companies forever? Or is it that a real company has an actual business you can verify in its filings, revenue, profits, a story that checks out at the primary source, while a pump has only hype, a target, and urgency? It's the middle one. Go back to module 1, the real one survives a trip to the primary source. The pump has nothing there but noise. That check is exactly what separates an opportunity from a trap. Here's the heart of it. If it screams, walk away. 1. A tiny, obscure stock plus sudden, Coordinated hype is a red flag, not a tip. 2. A guaranteed, quick return wrapped in urgency means someone is selling to you at the top. 3. Follow the incentive, the loudest voice already owns it cheap, so walk away, and take any genuine idea back to the primary source to verify. Real wealth is built quietly and slowly. The get rich this week story is almost always a trap with your name on it. Start free with a risk DNA assessment at app.investinsightspro.com. Your score is next.